I think everything is pointing to higher, and Bitcoin now breaking out to a new all-time high, and Q4 traditionally very bullish for Bitcoin. I think that at some point the short sellers, they will run out of fuel, and also the sell pressure from those investors from this international deal. At some point they won't have any more shares to sell, right? And there will be a turnaround, and as Bitcoin keeps going up, the buy pressure will continue to increase, and Metaplanet will turn around.
One, one, one.
Are you all in on the chair?
One.
How many chairs are you sitting on right now?
Hello, everyone, and welcome to One Chair. None of what you will hear is financial advice, and this podcast is for educational and entertainment purposes only. So today, our first topic is going to be around Stretch, the preferred share of Strategy, the last one that was put on the market. Now we have some news from the end of September here, with the dividend payments that were increased once again by 25 basis points to 10.25%. And price finally reaching the target price for this instrument. As a reminder, the idea of Stretch is to have it act essentially as a stable coin that is priced between $99 and $101. And if it falls out of this price range, Strategy has different instruments to bring it back into this price. That's the idea here. And now is the first time since it was released, we did hit the $99 mark, which opens up the possibility for them now to hit the ATM on this instrument. And this might get really interesting now in a bull market. Also, thinking about the volumes that STRC is doing, and for that we can flash up a slide here on the historical volume of Strategy's preferreds, and you can see in orange STRC has been historically the preferred with the highest volumes. It has been quite low over the last few weeks here, but you can see the trend now picking back up, and a very strong first week of October here, in combination with the price hitting the range where a Strategy can start hitting the ATM. So interesting times ahead on that one, I would say. What are your thoughts, Eve?
Just maybe to start off, last week Strategy didn't use the ATM, and that's because they were closing the books. So not that they ran out of money, as I've heard sometime today, I think. So it's just a kind of a blackout period. Yeah, no, I mean, we even saw, I think, was it on Friday last week, that even after hours, the STRC almost hit $100 per share. So that was quite interesting to see that there was still a lot of movement even after hours on the preferred. Yeah, I think we should see probably this week or the next week finally see this ATM hit STRC to start accumulating Bitcoin.
Yeah, exactly. Good point that you mentioned that there were no buys last week. I was actually already curious to see if they started hitting the ATM on STRC last week, so was a bit disappointed of seeing no buys at all. But it was the same last quarter. I think it's at the beginning of every quarter they have this blackout period to consolidate the books.
Yeah, exactly. So there's the at the end of the quarter, the blackout period, and then I think there's 1 or 2 weeks around the quarterly call that they do.
All right. Then if you don't follow Josh Mandel on X, I would recommend that you do, because he has some interesting insights, and not all of them are bullish, or he's also a bit critical on MSTR. So I think it's good to also try to steelman the arguments and to see some different perspectives. He is very bullish on Bitcoin, however, so you can also get FOMO by listening to him here with a price target of over 400,000 in a month. So we'll see how this pans out. But I want to talk about another one of his tweets from last week on STRC. He says that Strategy has a clear way of making sure that the price doesn't run up too much. So if it goes over $101, of course, they will hit the ATM like crazy and just bring the price back down by flooding the market with new shares. So this is quite clear. Then on the downside, of course, they have the possibility to raise the interest rates, but they do that. They don't have the possibility to do it right away. They do that on a monthly basis, so they can't react on a day-to-day basis. And I think the arguments around his tweet are, what happens if we have during the bull market, we issued a lot of STRC. You've seen the volumes. And if the next months are very bullish, they will be able to issue billions, basically, of this one. And then what if sentiment turns again? And then the price gets challenged to the downside, and then they react by increasing the interest rates. But how far would they be willing to go? Do we go to 20% interest if 19 is not enough and it's still under 100? And yeah, these are questions that I think we'll need to see how the market reacts to certain situations. And this product sounds really good right now, and it probably is. Saylor called it his iPhone moment, right? But it hasn't been tested, is the message here, right? So we'll need to see how it works out, and how, if there is a loss of trust because Bitcoin has been read for 6 months in a bear market and is down 50% from its high, what does that do to those products? And yeah, we know from previous bear markets that sentiment can be really bad, and yeah, would be interesting to see how this first bear market on those preferred shares work out, especially STRC, because there we have the clear target of strategy of not going below 99, right? So I don't know what you think about that.
Yeah, no, I think it's an interesting thought experiment, and I think it completely makes sense, right? Because we haven't seen any bear market on these preferreds, so we don't know the reaction of the market when Bitcoin goes down. That's the first thing. The second is exactly, I think that's probably the reason why they're so mispriced, because people are still kind of scared of, hey, what happens in a bear market? Are those preferreds really as solid as the Bitcoiners think? Obviously, if you're a Bitcoiner, that's what we've been saying, right? Probably that's the risk-free rate. But all the normies out there, they still are very new to all of this, and they probably don't have a strong conviction of Bitcoin. So if Bitcoin starts falling, they're gonna again say, "Oh, Bitcoin's dead." If Bitcoin's dead, then those preferreds are also dead, right? Because they're backed essentially by Bitcoin. So I think that's probably the main reason why they're still mispriced. And I think having a first bear market and see how they react will enable the full potential of these preferreds. So it's probably not bad that we have a bear market, and I suspect that they will survive the bear market, especially how strategy has layered its balance sheet overall with the over collateralization of every of these preferreds. And that's just gonna bring even more conviction once we go through this cycle, I think. To some extent, we've seen now a bear market on the treasury or the company treasury playbook, with many of these companies, including strategy, suffering on the common share price side, right? However, yeah, Bitcoin has maintained its strong momentum to some extent. So yeah, we haven't seen the full extent of a bear market yet.
I agree with that, and yeah, obviously the preferred and strategy would still be fine even with a bear market, with a 50% downturn. We've talked about that extensively, that it would not hurt the company long term, as long as Bitcoin over time is appreciating in value, like Bitcoiners think it will. But still, the market might react differently in the short term.
Yeah, what will be very interesting to see is if Saylor manages to get some credit ratings on the preferreds before this happens, because that's going to give the market some additional assurance and probably a little bit more conviction on these preferreds before the bear market. So if that happens, then I have a strong belief that there will be a repricing and potentially to some extent maybe even cancel the bear market, or at least in a short term cancel the bear market. If those preferreds get a credit rating after the bear market, then it's going to be interesting to see how it plays out. We also had news last week that the MSTR preferreds got listed on Robinhood, and that probably explains the volumes that we had on the last week of trading.
Yeah, the big news at the end of last week with Robinhood, a lot of retail investors on that platform, zero trading fees, right? So a big market opening up for the strategy preferreds. So bullish for strategy and Bitcoin.
Yeah, absolutely. And just maybe to finish off again on strategies, the quarter gains are up to 3.9 billion for the quarter. So as we mentioned last episode, black numbers and another step forward to the S&P 500 inclusion, in my view.
Yeah, December will be the next decision time. So up to then, nothing but speculation. But I think now with the second quarter in a row that they qualify, the chances are going up that they might be included. Okay, so I think that was it on MSTR for today. Let's move to Metaplanet, the stock and company that we extensively talked about last week, and it looks like it did hit a bottom, or at least it hasn't gone down anymore after some brutal months since June and down only. We are now kind of bouncing up from the 500 yen range, 600 now, but still quite a depressed story, especially looking at the overall market environment, right? With we're taping that on Monday after trading hours, and the weekend has been very bullish for Bitcoin, and the Nikkei was also opened 4 or 5% in the positive today. So very good day for Japan, and still Metaplanet was down for the day. So going against the overall market and against Bitcoin. So not out of the woods here on Metaplanet yet, but looks like a bottom might be forming here.
Yeah, no, it looks like it's struggling to get back up, and I think one of the things that was mentioned or speculated on is that it's due to the institutional investors that were caught in the deal of Metaplanet, and obviously Metaplanet was able to raise a lot of cash and was able to accumulate a lot of Bitcoin, but probably some of these investors are not fully aligned with the vision of Metaplanet and are starting to sell out at these prices, which seems to make some sense. Here, I think this obviously this deal was big for Metaplanet, but I'm starting to question a little bit these deals that have been done, right? On the Metaplanet side, so we had this international institutional investor deal, and then with some other Bitcoin treasuries in the US, those pipe deals, where you raise a lot of money, manage to get a lot of Bitcoin very quickly. That's great to get started. But then the investors don't seem to be aligned with your long-term vision, and then they sell out. And looks like retail is left out, holding the bag, which is not super nice. And it also, in my opinion, it gives a bad connotation to the Bitcoin treasury space in general. So I'm starting to look at it a bit critically from my point of view, and question these types of deals just in general. So obviously, again, it brings a lot of Bitcoin very quickly up in the balance sheet, but there's a bit of loss of confidence. There's image potential issues that come with it and all of this. So I'm not sure in the long term if it's really that positive. I don't know what you think about that.
Yeah, I think the same way. It's kind of breaks the trust. I mean, I don't think it applies 100% to Metaplanet because the stock is still up. If you zoom out a bit, it's still up a lot over a year, over a longer period of time. But other companies, I'm thinking Nakamoto, for example, that went up to $32 and crashed down to $1 because the fact is that the pipe deal was priced around, I think, 120. And it revisited that price. Same for Sequence and Strive now is also crashing towards the pipe price. So yeah, it is a bit breaking the trust, and we've seen it over a few different companies here. And on Metaplanet, I think this deal was closed around 550. At the end, the market price on that day was over 600, and they got a 10% discount, so around 550 yen. And this means that if those investors they were just out for a quick profit, there's a lot of sell pressure around 600 now or above 550 because they would just want to sell at a gain, right? And this is what happened on the other pipe deals, that the stock was way higher than the pipe deal that they got, and they just basically dumped all of their shares as soon as they got their hands on it. So yeah, I agree. It's kind of a pump and dump for big players here, and not a very good look for those companies and for the space.
Yeah, and I think also maybe just on the Metaplanet side, there was two issues, right? It's not only about now the selling that happened, but before that, I believe the shorting, a lot of the shorting probably came from those investors to get a better deal as well. So you're looking at two times the trouble. And yeah, again, I'm not 100% convinced that was the right path, considering that up until now, Metaplanet had a meticulous execution.
Yeah, and I think they're all still learning also what is good, what can be done, and maybe in retrospect we'll look back and say, okay, it was painful in the short term, but it was the right thing to do because it got Bitcoin on the balance sheet at a price of 110,000, and we're way higher, and it allowed them to also issue more preferreds, which allowed them to buy even more Bitcoin. So we don't know everything that's going on in the background either, but yeah, the facts as of today, they don't look very good with those huge dumps in price, and retail shareholders being yeah, at the receiving end of this.
Yeah, and that's why also for example, Matt Cole, he's reiterating the message that you should hold Bitcoin treasuries for at least 4 years as well, the same that you would Bitcoin, right? Because we're looking at a similar cycle, and I tend to agree. I think on the long run, probably we'll look in retrospect and be fine. However, yeah, I still think it sheds a negative image, unfortunately, and yeah, that's just a shame because we haven't seen a strategy or a smarter web with those types of deals. However, we have seen Capital B doing these types of deals with the appropriate partners, and they have succeeded very well with the right partners. So I think it can be done, but you need to know who you're dealing with. And up until now, again, probably those pipe deals have been done rushed, and probably the same a bit for this Metaplanet deal.
Yeah, and on that note, there was a very interesting podcast discussion between Alexandre Lazarev from Capital B and Richard Byworth, and they discussed the importance or the potential importance of knowing your investors. And it was not in that context; it was in the context of the convertible bonds, if I remember correctly. And there, it's kind of the same story, or at least that's what Saylor is saying, why they moved away from those deals. It's because he saw that whenever they issued those convertible bonds, his stock was getting shorted, because that's the way those ARB traders work. They buy the converts and then short the stock to be protected to the downside, right? And this was not ideal, or it was not what strategy was looking for, and put downward pressure on the stock price, which then limits the ability to do the ATM, and you get less Bitcoin on your balance sheet. So it's counter the strategy of the overall company, and that's why they stepped away from that. But the question is, could you find investors that are interested in those converts, but just want to hold them and don't have this ARB strategy, right? And I think this is what Capital B is looking into as well. And yeah, it goes into the same direction as you were saying. Also for those pipe deals, maybe you could find investors that okay, they get a very good deal or a deal below market price, but they're also aligned with the company's vision and will not dump any of the stock when they get them, right?
Exactly, and I think you're completely right. With the convertible bonds, it's the exact same issue. However, we've seen that there are investors that are willing to buy those bonds and to hold them, right? Thinking of some insurance companies that probably don't do these volatility arbitrages. So they would probably be more aligned as investors for these convertible bonds.
Do you think strategies should get back into converts if they find the right partners? Because that's what we've heard Saylor say a bit in the last few months, that he is not levered enough, right? That's also maybe why the MNAV is contracting, and that they're less and less levered, and they're not able yet to issue a lot of those preferreds. There's not enough volume yet to issue billions a week or month. So the convertible bonds would be an instrument to get them levered up again.
Yeah, I think they should, if, and that's a big if, they find the right partners. That's one thing. And also if they price them right. Because up until now, I feel like they were mispriced more to the side of the whoever is buying them. So if it's a good price for the common shareholders, absolutely. I think it does make sense that they would still issue those, because at the end of the day, if they're still, or to some extent, as accretive or almost as accretive as the preferreds, it makes sense to still acquire Bitcoin at the prices that we have them today, right? But yeah, it's two big ifs.
And I think they might be waiting now because, yeah, they expect the volumes or the ability to hit the ATM on the preferreds to go up dramatically.
Yeah,
and they want to have the room, right, to issue those.
And the reason they're probably stepping out of the convertible is because those ifs will not materialize, right? It's going to be very hard to find the right partner and to price them the same way that you could price those the preferreds right now. As he likes to put the Bitcoin torque on the preferreds is way higher than on the convertibles as of today.
Yeah. Okay, back to Metaplanet. We had some additional news coming out the 1st of October, first day of the quarter, with a presentation that Metaplanet released, and some interesting information about a new Project Nova, with no more information than that.
Yeah, we don't know much, but it seems like they're building up the whole Bitcoin strategy in Japan. So there has been speculation on X about being a Bitcoin exchange, which could be interesting. And maybe the last topic of the day is that Japan elected a new prime minister, and that's the reason actually why the Nikkei hit new all-time highs and was up 4 to 5%. At the same time, obviously, the bonds, the Japanese bonds were crashing, and the yen as well. So those are great catalysts, because this prime minister happens to be very loose on the monetary policy. So I think that it's just a great new catalyst for Metaplanet.
I think everything is pointing to higher, and Bitcoin now breaking out to a new all-time high, and Q4 traditionally very bullish for Bitcoin. I think that at some point the short sellers, they will run out of fuel, and also the sell pressure from those investors from this international deal. At some point they won't have any more shares to sell, right? And there will be a turnaround, and as Bitcoin keeps going up, the buy pressure will continue to increase and Metaplanet will turn around. So I think a lot of bullish news again over the last week here.
Yeah, I couldn't have said it better. I think we can end it there. All right. Thanks for listening. See you on the next one.
Bye-bye, everybody. See you next time.
How many chairs are you sitting on right now?